Welcome back, everybody. This is Jonathan Tran
Hey everyone, this is Frank.
from Paramic Financial Services, and you're back with the Paramic Hour. It's already been over a week, but we are back now, and we're here with our topic today. We're going to talk about, if you are receiving a 1099, receiving income, how do you save for retirement, and what are the tax implications when you receive a 1099? Right? So for those of you who are self-employed and primarily receive a 1099, how do you strategize so that you could save money the best way, but also save money on taxes too? And maybe if you're still like working a W-2, but you're moonlighting on the side and you're getting a 1099 for some side income, side work that you're doing, what are some things that you could do to, better your finances, right? So that's going to be our topic for today. Make sure that you guys follow us on Facebook by liking us, following us, and also on our YouTube channel as well. We'll post that for you guys to view. Hello, Kotan. Good to see you. Always our
Hello.
#1 fan. Thank you for joining. Today's topic is going to be pretty interesting. We're going to do in English today. Usually our live streams are in English Thursdays, and then we do Vietnamese in the same topic on Tuesdays.
Yes.
But as most people know, you guys follow us a lot. We always start out with some news that's going on. So if Frank, you want to kick it off today?
Okay, sure. Thank you, John. So I have a couple of news today. The first one is regarding the student loans situation that has been going on. So on August 24th, the Biden administration actually forgives more student loan debt. Last week, the U.S. Department of Education announced it would discharge about $5.8 billion in student loans held by more than 300,000 disabled Americans. So the condition to be qualified for this loan forgiveness is that you have to be pretty much with disability.
Okay.
So that's the third round of student debt forgiveness announced since the Joe Biden administration took power. In total, the Department of Education says it has approved discharging about $9 billion in student loan debt for more than 450,000 students this year alone. So that's some good news. So maybe we can expect more numbers to come in the future. Let's hope. And I do hope that more people would be eligible as well, not just the ones with disability, because I know I have a lot of debt on my shoulder right now.
Yeah. Let's hope so, Frank, because I just had paid off my first student loans when I was in California just recently. It's been such a long time, and then now I'm paying my wife's student loans.
It never stops. It's just like
it never ends. So, but we do what we got to do.
Yes, and then the second news is that this one is gonna be a repeating news, but actually the deadline for health insurance. The marketplace has already passed, which was August 15th. But for some reason, some of you guys, after the deadline, you've been trying to contact me and asking, hey, can I still enroll in the marketplace plans? The answer right now is practically no, because the deadline has passed. You have to wait until November 1st to start enrolling again. The only way that you can change or enroll into the marketplace plan is that you qualify under something that's called special enrollment period, which you moved out of state, you lost a job, you got divorced, you lost qualifying health insurance, like you just get labor, so now you don't have that children's, what do you call it, John? The Medicaid for pregnant women.
Medicaid.
Yeah. So if you fall under those categories, then yes, you might be qualified for health insurance through the marketplace. But other than that, you have to wait until November 1st. And I cannot stress this enough. I've been saying this over every live stream. Keep a lookout for those deadlines because you don't want to miss it. And you want to make sure you always have the health insurance coverage just in case something happens to you. So that's all my news for today.
Okay, thank you, Frank. Yes, I posted in the link below in our stream to the healthcare.gov special enrollment list. Some reasons why you can special enroll outside of the open enrollment period. So just make sure that you qualify, right? It doesn't mean that if you pass the deadline already, you cannot absolutely apply for health insurance. You definitely still can. It just has to be some special circumstances.
Yes.
Okay, so take a look at that. If you're not quite sure, if you feel that you have a really substantiating case, then we could try to help you make a case to
Yes.
healthcare.gov, and then we can appeal.
Yes.
Right? So that doesn't mean that you all lost hope. But try to stay within the enrollment dates, because if you don't, doing like an appeal, it takes time, right? And
True.
sometimes you need healthcare right away, and you don't have time to wait.
Correct.
So just make sure you do that. Other options you can do is also you can get temporary insurance off the exchange. They're not as robust in terms of coverage, what the marketplace offers, or even if you got work insurance, but something's better than nothing, right? Good for emergencies, good for usage. The network, I think it's like a EPO type network,
Or HMO.
Or HMO. So not PPO. PPO is reserved mostly for companies that have group plans, but you still have some options. So
Correct.
yeah. So if you missed your boat, you gotta wait till November or December, right?
Try to stay healthy in the meanwhile.
Yeah. Okay, so thank you, Frank, for that piece of news. I hope that I know you've been following that student loan debt for quite a while. I hope it happens for you guys.
I
hope
do
it happens
so.
for Tinyom too. Then that's one less debt I have to pay off. For my news, I'm going to keep saying the same thing, because free money is free money. Well, not free money, but money coming into your bank account is still always helpful. And so if you have children, the IRS is sending checks out. I got my second check in the mail the other day already.
Ooh.
I didn't even look at it, because I'm just going to deposit it into Ellie's savings account. But it's kind of nice just to get a check from the IRS. I didn't want to go on there and give them my bank information, so I was just let them send me a check. But yeah, keep an eye out for those checks. If you have children under the age of 6, you should receive up to $300 depending on your income. If you have children over the age of 6, under 17, you can get a little bit less than that, like $250 a month from now until the end of the year. And also depends on your income, right? So if you're married, you're going to be up to like that 150 cap. If you exceed that, they'll start phasing it down, right? If you're single, 75,000. If you're head of household, I think it's in the middle somewhere. But there are caps, but most people will probably qualify for that. The website is very easy, straightforward. Just enter your information. If you have already your information in there and you want to update your direct deposit, you can do that. And then for those of you who just had a child this year, I know like one of my friends, he just had a baby this year. If you just had a baby this year and you had a report on the tax, but you want that money, go ahead and go to that website that I posted the link for, and you can enroll. Okay? Second set of news for me today is I'm going to talk about the EBT again, because the school actually just sent out a email to us about the food program, and also sent home some paperwork with Ellie for parents to read about the food program, saying that those families who are lower income, if you are looking for some money for food, because the COVID last year, there's a lot of unused funds for food. They are giving it to low-income families in the form of an EBT card that you can use up to $1,000 per child. So that's quite a bit of money. I heard people having lobster parties, but it's really for the kids. I don't know what kind of lobsters those kids are eating, but it sounds pretty fancy to me. But the website that we put here that is being scrolled through, that is just a general website, and then you find the state that you live in, you click on there and you look at the state program. I do not know all 50 states programs, so this is just a resource for you guys to look at, so you see if you guys qualify and get some money for the kids so that you can feed them, right? So don't miss out on that. If you qualify, that's up to $1,000 per child. Wow. Yeah, quite a bit of money. Now, Frank, you were mentioning some piece of news earlier, but then I forgot. What was it? You told me that you should tell that news to today.
Oh, the insurance?
Home insurance, yes. So thank you, Anbat. If you are in the coastal region where
yes.
right now in Texas, Louisiana area, We have a big storm that's coming off the coast right now. So if you do have, if you're buying a home right now, or if you are renewing your insurance within the next week, make sure you get that insurance now, because the state of Texas has already sent out a memorandum saying that for the Texas government insurance, like Texas Fair Plan, they already said that they're going to be cutting off binding of policies if the storm gets closer, meaning that you will not be able to buy insurance for your home. If you're closing on your house, you will not be able to buy insurance for your house, meaning that you will not be able to close on your house. So make sure that you get your insurance now before that storm comes. Okay, so those are for people that are on the coastal regions, and pay attention too, because in other parts of the country, if you have a storm coming, a lot of time your insurance may be impacted where they won't sell the insurance because they're afraid that as soon as they sell you that insurance, that you may have a claim because there's a big storm coming, right? So they may cut off the binding processes for you to buy those insurances. And so if you're in the middle of buying a new car, a new house, or some big transaction, make sure you take care of it now. Don't wait until the last minute. Don't wait until your loan officer tells you, okay, go run, get it now, get it done now, right? Make sure you keep an eye on what's going on so that you don't just 100% rely on the other party, but you take charge of your own finances and take care of that. Okay, so make sure that if you are in an area that is going to be storm bound, make sure you take care of all your insurance stuff.
Okay. Good news.
Y'all switch place left to right. Yes, Uncle Fang. Thank you for noticing. Today, last night, I was doing some CE, and I left my computer on, and I ran out of batteries. So I'm plugging it into the wall right now. And so, but Frank, he said that his better side is the left side here. So he wants to kind of see what it feels like to sit in my spot.
Wrong. My both sides are good.
Both sides is good. But yeah, I see how Frank likes this side. It's a little bit brighter on this side because the light is kind of right here. So no wonder like Frank's like sweating up a storm last stream.
I know. Right? I'm in the spot right now.
Yeah, but the more you do this, you get used to it, and then you just kind of hold the sweat in until like the show is over, and then you just like raise your armpits and it's all wet. Right?
Endure and survive.
Endurance. What kind of endurance are you talking about?
The sweat.
Gopayang says that Frank's confidence, that's the best.
Thank you. I appreciate it. I do try my best.
Yes.
When I first started, I was like sweating to my pants. Yes. I still am, but the more I do this, the more I like it. Delivering news and educating our viewers. I find it very useful. So the more I do it, the more I like it.
Good, Frank. Well, we definitely appreciate you taking more of a proactive role in doing this. We don't get paid to sit here and do the live stream. We do this because we like what we do. We want to share information for you guys.
Correct.
And so that's why we're here, and we have a good time. I know finance is a tough topic to kind of follow and listen sometimes, but
correct.
I do appreciate that everybody that follows us and listens to us. And I know a lot of people offline always text me and call me, hey John, I watch your show, good information.
Yes.
So I hope the information is good for you guys. But that's it for our news right now. And I see that we have a couple people here. So hello, everybody. Thank you for joining us. Let us know if you guys have any questions about our topic today. Feel free to interact with us, ask questions.
Yes.
We're going to talk about people that receive 1099s, right? If a 1099, those people they're self-employed. They don't pay their taxes up front. They may pay a lot of tax at the end of the year. So today we're going to talk about some statistics first, kind of let you guys see what the current environment is like.
Okay.
And then from there, we'll Frank's going to ask some questions that he's developed and ask some customers, or he hears customers ask a lot about, especially in our Vietnamese community.
Correct.
A lot of people are all 1099. They work for a nail salon.
Correct.
They work in the beauty industry. It's all 1099. A lot of people work sideline in insurance, real estate right now is super hot. Everybody's a real estate agent. They all receive 1099. So a lot of people receiving 1099s. And what are the tax implications, right?
Yes.
How do I save money when I'm a 1099 versus being a W-2? These are a lot of questions that people may not realize. So we're here today to kind of shed light on that and help you guys understand a little bit more, and
Correct.
hopefully you take away something good for today.
Yes.
Okay, so Frank, why don't you, handle your part on
Yes.
giving some cool statistics.
All right, so before I do that, I just want to say something real quick to the viewers. If you find those videos helpful, and please support us by sharing to your Facebook, or to share our YouTube link on your wall, so more people can reach out to us, because the things we say on the live stream, maybe someday some people are gonna come across and say, hey, I need this, and we can help them, so it never hurts. So please support us by sharing. Thank you. But back to the topic, I would like to go over some statistics about how much people pay in taxes in the last couple of years. So in the most recent IRS data review, that Americans who filed taxable returns paid an average income tax payment of about $15,300, and this is in 2018.
Wow.
This includes direct taxes, such as income taxes, as well as indirect taxes, such as payroll taxes. In general, the average American family pay about $2,400 in federal income tax in 2018. This number was calculated based on the returns of over 153 million Americans households who filed during that period, which included just over 100 million taxable returns. Naturally, the average tax payment is a bit skewed, given the fact that over 56,000 tax returns were for people with adjusted gross income, otherwise known as the AGI, over $5 million, representing a seven-figure tax bill for those who are in the top percentage of income earners.
So it sounds like the government, if they multiplied 153 million files, and the average was 2,400, so the government has collected $367 trillion in taxes in 2018.
Oh, wow.
That's a lot of money.
That's a lot of money. But, okay, so that's for how much people pay taxes. But out of those all Americans, well, do you have any questions before I move on to the next numbers?
No, let's see how the correlation between paying taxes versus saving money.
Yes.
Right?
So that's paying taxes. Now we're going to move to the next section, which is how Americans are saving money. So statistically, Americans have more than $4 trillion in personal savings. 69% of adult Americans have less than $1,000 in a saving account. So to me, that's a pretty alarming number, because you never know what's going to happen, and you want to make sure you have some savings in your bank account, maybe more than $1,000. The average household savings in America are at $17,000. 73% of millennials are saving money, so that's pretty good in our age group. So we started thinking about more about saving for retirements and other situations. So that's a good sign. The median balance of retirement account is about $65,000, and the U.S. has a retirement savings deficit of $4.3 trillion. The black households have about $30,000 saved up for retirement, and among the U.S. population, just about 30% of Americans have a financial plan that includes savings. So less than half of the population are actually thinking about savings. What about millennials? The fact that millennials are saving more than older generations. While millennials may believe that they're bad at managing money, which I am, the majority of them, about 73%, are actually saving. So out of those 73%, 59% have $15,000 or more, which is excellent, especially when compared to the average American savings rate. 3/4 are saving for retirement, and just over half are saving for emergency fund.
That's really good to hear that the younger generation now, it seems like education around managing your personal finances is becoming more and more aware now compared to maybe like 5 to 10 years ago. right? A lot of people, they're just in the rat race to save, to work, to make money, to make ends meet.
Yes.
And a lot of people don't think about, retirement savings. And, it's kind of sad to hear that a lot of people, the average savings now is kind of a little bit higher. Like you said, about $65,000 for retirement.
Mm-hmm.
$65,000 is not bad, but when you really think about it, if you have $65,000 in savings and you're retiring at 65 and you think that you have another 8,000 days to retire, well then let's see how much money that really lasts you, right? If retirement lasts you 8,000 days, that means that of that $65,000 that you save, you can only use $8 a day.
Oh, wow.
Right? $8 a day will probably get you one hamburger meal at McDonald's right
Probably
now.
two.
Right? Unless you go like no drink, no fries, maybe you can buy like 2 sandwiches, right? But that I don't know if that's the kind of retirement that I would really want. If Social Security is only what $1,500 a month and you're averaging out 30 days, you have $50 a day to live. Plus that $8, you have $58 a day to live, right? And so that's not much at all. If you count in like rent, food, insurance, taxes, healthcare, like you're broke, you got no money, you're living, you're barely getting by, right? And so it's good to hear that the younger generation right now, they are very keen on trying to make more money and also very keen on finding multiple streams of income.
Correct.
To as early as possible, right?
Yes.
Of course, they don't have it right away, but they understand that it's something that they have to start working on right away. Because they never know, like, if that job that they have today is going to be
Forever.
Forever, right?
Correct.
So
That's the thing, and John, I heard a lot back in the day. They call it most of the Americans, they live paycheck to paycheck. And the more I do this, the more I realize the importance of savings. And when I think about my own future, I don't want to live a life where I just wake up, go to work, and I live paycheck to paycheck. I have no savings left to establish my own family. And that's the one situation that I don't want to be in. So this is why we're here, to kind of help and guide people to know more about the importance of savings.
right. And so that's why it comes our topic today, because when we're working with a lot of people, I see that we have like a wide range of different type of clients, right?
Correct.
You have your client that works a W-2, regular job, works for big corporate America, and then you have those other people that either they're working for a company that pays them a 1099, or they're truly self-employed, they own their own business. And so each person has different ways of making money, but then the tax implication is a little bit different for each person too, right?
Correct.
And then also how they save money for retirement could also be different as well. So then how do we take advantage of, if you're a W-2 versus a 1099, how do you save money? How do you save money on taxes, right? I mean, the average bill here is about $2,400 a year. When you really think about it, it's not much, right? But because you got a lot of people, it adds up to be a lot, right? So, I mean, of course you have a range. You have those who are lower income and those up to higher income. And so different people have to use different strategies to save money. But, today we're just going to talk about, 1099s in general, the general public. I'm not going to go into too high detail into like high income earners and how to save money for them. Maybe we'll save that for a different live stream. But today is more for like the general public.
Correct.
Right?
So my first question for Jonathan is that before we go into depth about how we can take advantage of W-2 and 1099, we should know about the basic difference between W-2 and 1099, right?
Yes.
So my question for Jonathan is that, John, can you tell me like the difference between a W-2 versus a 1099?
Okay. Yes, you have a straightforward question today, Frank.
I learned.
Not layers within layers and layers.
You will be in a maze.
All right. So what is the difference between a W-2 and a 1099? So a W-2 is generally when you are working for an employer, okay? You will get paid on a W-2. So your employer, you're their employee, they pay you on a W-2, you fill out a W-4 form, and then at the you get a paycheck, every 2 weeks, every week, every whatever. And on your check, you'll notice a couple things, Okay, when you're W-2, you have some they call deductions from your income. You have your federal taxes taken out,
Social
and then
Security.
you have Social Security, you have Medicare,
Correct.
you have your health care, you have your 401k, you have your benefits in there. So they deduct all these things out of your paycheck, and then you have your gross income and your net income.
Correct.
Right? When your net income gets deposited into your bank account. Now, when you receive a W-2, a lot of times some of those taxes are paid up front. So at the end of the year, sometimes people get a refund back, or maybe they pay less taxes because they've already been paying their taxes on every single paycheck.
Okay.
Okay. The difference on a W-2 versus a 1099 is on the W-2, on the portion where you have your Medicare, Social Security, FICA taxes, those taxes, when you are a W-2, your employer pays half and you pay the other half, right? So
Okay.
it's roughly, the total amount is supposed to be about 15% of your gross income. But what happens is that when you're a W-2, your employer pays half for you and then you pay the other half.
Okay. Okay.
So that's one main difference when you are a W-2 versus a 1099. Now, we also mentioned that someone who's W-2 also they have some deductions where they deduct their health care, right?
Correct.
Your employer could provide you a health care benefit, and they may cost share that with you, where maybe they pay 80%, you pay 20%, whatever the agreement between you and your employer is. You may have extra benefits, right?
Okay.
Such as your health care. With your savings, it's kind of done a little bit easier for you as well if you work for a company that offers like a 401k or offers a 403b. They will help you save money, give you incentive to save money with their program. Maybe they match you some money. So that way, kind of like when you work for W-2, everything's kind of taken care of for you, right? And you really don't have to do much other than, okay, where do you allocate certain things? And then everything is taken care of. When you're 1099, it's like a la carte. You're buying the steak, and then you got to piece everything together yourself. You got to piece together your health care by yourself, your savings by yourself, your taxes you have to take care of by yourself, your Medicare, Social Security tax you have to take care of by yourself. Everything you have to take care of on your own.
Oh, wow. Okay. So I do have another question relating to this. So for a 1099, I've also heard theories that when you're self-employed or you work as a contract and you have a 1099 forms, are there costs or bills that you can deduct when you do taxes?
Yes. So talking about when you are W-2 versus 1099 and deducting expenses, because when you work a W-2 and you work for somebody, any work-related expenses, you can be reimbursed for those expenses, right?
Okay.
Now, if you're commuting from home to work, they're not going to count that,
Correct.
right? But if you are expensing or you're traveling while you're on the clock, or you have some work-related expenses that the work told you to go buy and now they want to reimburse you, then the company is deducting those expenses. So you as a personal receiving a W-2, you cannot deduct any expenses, work-related expenses anymore, right?
Okay.
So whatever it is, your employer is supposed to reimburse you, and you're supposed to get your money back for that.
Okay.
Now, over on 1099 side, you don't have a company that's paying for all your expenses. Basically, they give you a check saying, hey, thanks for your service. Good job on your commission. Here's your commission. Here's your money for your service. And we're done, right? At the end of the year, they issue you a 1099. You report that on your taxes. And you yourself are responsible for keeping a record of all your expenses.
Right.
Right? So what are those kind of expenses? If you have rent, like you rent an office or a room, you can write off your rent. You can write off your cell phone, your electricity bill, your cell phone bill, any equipment you buy related for your work.
Okay.
You can write off. So like a cell phone, a laptop, a whatever equipment. Like if you're in construction, you have construction equipment you need to buy. You can write off your uniform. You can write off supplies, office supplies. If you work from home, okay, if you work from home, but you have income, net income, you can deduct home expenses too. Now, if you have a negative income, you can't deduct home expense, right? But if you use your home office as a where you can work, you can also deduct your home office as well, right? So there's a lot of expenses that you can deduct.
Okay.
as a 1099 or a self-employed person or a business owner, because nobody is reimbursing you for all your expenses to generate that income. Right?
Correct.
When you work a W-2, the income that you're generating for the company or that you generate yourself, the company already took care of all the expenses for you. They just need you to do your job, right? And any expense related costs, they take care of everything for you. There's only a few things that you need to take care of for yourself, kind of like your clothes, your gas to go to work and whatnot. But they take care of all the costs for you. You don't have any costs,
Okay.
right?
Okay.
So when you're 1099, you have all those costs to worry about. So when you receive that income, maybe of $50,000, well, you can start deducting now. Now, how much can you deduct? Well, it depends on like those items. Some of the items that I listed, you gotta have good record keeping,
Okay.
right? So that way, you know, the IRS really, you know, they run this country on trust, right? They trust that you're gonna be a good citizen. They trust that you're gonna do the right thing. They trust that you're gonna report the right taxes to them.
Right.
You know, they don't check right away, but they can
They
do
might.
random checks. What they call audits. And if they audit you and you cannot prove what you told them that was the truth, then they can take back money
Oh,
or they can
wow.
penalize you, right?
Okay.
So you have to make sure that you have to be careful when you are 1099 that you try to keep as many receipts as possible, because at the end of the day, a lot of people say, well, I hire a CPA or I hire a tax person. Well, the tax person, the CPA, they're not responsible for your tax, right? You are responsible for your tax. And so if you can try to plead the card where you say, oh, well, my CPA did this, told me this, that, well, at the end of the day, if you look at the signature, is it their CPA signature or is it your signature? It's your signature,
It's my signature.
right? So you're responsible for it. Your
Okay.
CPA just helping you prepare your tax,
Okay.
right, and give you advice. But at the end of the day, you're responsible for it. Now, if your CPA committed some kind of fraud, then that's a different story. But generally speaking, you know, no CPA tax preparer is going to be dumb and risk their license to,
Yes.
you know, do fraudulent things just for one file, right? So most of the time, they give you advice, and how you take it, how you want to structure your taxes is up to you. But
Okay.
you know, they try to help you do it the right way as possible.
Okay. So that's a very good information. So if something happens, is my negligence, not the CPA negligence.
Correct.
Okay. So you know, based on what John just told us, if I have a 1099, I will make sure I keep all the documents throughout the year that I've been working, like
Mhm.
like a receipt or any contracts that you sign, just to make sure you keep all of those when you do your taxes. Thank you, John. So my second question is that now that we know the basic between the difference between the W-2 and 1099, how do we take advantage of those forms? And so that brings me up to my second question: what savings options for retirement does W-2 have versus the 1099?
Okay. So it's a very good question, Frank. So let's pivot back to savings, right? Because we're paying so much tax, but at the end of the day, we're not saving much.
Yeah.
And so, but of course, we need to pay our taxes to help our country, you know, protect the way we live, our lifestyle, and protect our country where we stay. But at the same time, we are responsible for saving for ourselves too. Now, the government does help a little bit with Social Security. In the last live stream, I don't know if you guys, well, some of you don't speak Vietnamese, but Frank had mentioned the last live stream is the government is proposing like All-American Encouragement Savings Act or
Correct.
something like that.
Okay.
Is that they're starting to take some money out of your
Paycheck.
paychecks, and also asking your employers to help to save money to put like a rainy day disaster fund thing. So in
Correct.
case something happens, they have more money to give to us, right?
Correct.
So I don't know how much they're going to help us, because if they're taking more money out of ours, then that's less money coming to us. But I guess, you know, instead of the government coming up with ways to give us free money and then we have to pay back in massive taxes, maybe this is a way to help curb that a little bit,
Yeah.
right? But in terms of savings for W-2, when you're a W-2, you work for a company, most of the time the company will offer you a 401k or a 403b if you work for the public sector. Okay, basically the advantages of a 401k, 403b account is that you have funds that the employer has chosen for you already. It's very easy to understand, and it's relatively low cost, minimal costs. and sometimes your employer may match you, right? So you want to ask, like, if you are receiving a 401k, first thing you want to ask is, when do I qualify to start? And two is, you want to ask, when do I qualify for a match, if any, and how much am I getting? And you want to make sure that you at least put whatever they're matching in. Now, whatever they're matching is the minimum amount that you need to put in. Doesn't mean that that's what you should put in, right? I have a lot of people who make tons of money, and when I ask them, they say, yeah, I got my 401k, I maxed it out. I said, oh, you're maxing it out, great. And then when I look at their statement, I said, so when you said maxing out, what do you mean by maxing out? They said, yeah, the company matches me X percentage. I max it out. I'm maxing it out, right?
Okay.
They don't even know that the max is not what the match is. The max actually, if you're under 50, is $19,500.
Okay.
But can you imagine saving $19,500 a year? That's a lot, right?
That's a lot. That is a lot for me.
But as you are making money, if you have low responsibilities, or maybe you live at home still, maybe that's a very attractive way to be saving more money and getting more tax benefits, because every dollar that you put into your 401k or your 403b, you get to deduct that from your income at the end of the year.
Oh.
So for example, you make $50,000 and you put in $10,000, right? That's what, 20% of your income?
About that.
That's a lot, right? It's quite a bit. And so you put in 20% of your income, then that means that at the end of the year, when you file your tax, you only file your taxes on $40,000 instead of $50,000,
But
right?
is there a cap that I can contribute, or?
The cap you can contribute is $19,500 if you're under 50.
Okay.
If you're over 50, it goes up $6,000 to $24,500. It
Okay.
goes up every year, or it changes every year. So if you're not sure, give us a call or text us or send us a message. But those are some key ways to understand that, hey, if I really need to save money, this is a great way to do that. Why do you want to save money into your 401k, 403b? One is that you want to save money for retirement. And money that you put in there, you don't have to pay taxes now, you pay taxes later. Two is that you get deferred tax treatment, meaning that you don't need to pay taxes every year on the gains, right? It's all deferred later until you take it out. When you take it out as earned income, meaning that you don't have to pay capital gain tax on all the earnings that you earn in your account, so you're saving tons of money there, right? Three is that money that you save into your 401k, if you ever needed it for an emergency purposes, whether you need to buy a house, you need to pay for college, or you have a medical emergency, you are allowed to take it out without a penalty.
Oh.
Right?
Okay.
But you just pay the taxes. Now, if you do take it out for whatever reason that's not a special reason, then you're going to pay taxes 10%. So that is the disadvantage of putting money into 401k. But because they're giving you so many other advantages, they got to give you some form of disadvantage, right?
True.
So 10% penalty if you take money out of your 401k, 403b too early. Now, if you roll it over to another place, like you change jobs or something like that, then that doesn't count as a withdrawal.
Okay.
Savings in your 401k is very good. Now, some people may tell me, John, I work for a company, I'm an employee, but my employer doesn't offer me a savings account.
Okay.
So what do I do?
Oh.
So what you do is you get an IRA, individual retirement account. It's the same thing as a 401k, it's just named differently, but it works exact same way. The only difference is that when you're working for a company, you only can put in $6,000 a year.
Okay.
$6,000 a year. If you're over 50, you can put in $7,000 a year. So you don't get as much savings power as the 401k, right? So that's another advantage as well. You also can save into what they call a Roth IRA. A Roth IRA is you've already paid the taxes, but the money that grows in there, all the interest earned later when you retire after 59 and a half, if you take it out, you never have to pay the taxes on the earnings, right?
Okay.
But that one is also limited at $6,000 under 50 and $7,000 over 50. And between the traditional IRA, where you get to deduct taxes now, pay it later, and the Roth IRA, it's a total of 6. You can't do 6 each, right? So you got to choose how much you want to put in here and how much you want to put in here. You can't put more than 6,000. Now, if you use your 401k can be split into traditional and Roth as well, and then you can contribute up to $19,500 total between the two accounts.
But between those two accounts, and John, I have those questions a lot. Like people are kind of on the fence when it comes to traditional IRA versus the Roth IRA because they're like, okay, I don't know which option is better for me. So when it's time to make that kind of decision, what factors contribute to the decision that they could make?
Very good question, Frank. So Frank asked a very good question that many people have commonly asked is, how do I know which way I should save? Should I save in a traditional IRA or should I save into a Roth IRA? Now, a Roth IRA sounds very lucrative. Why? Because you don't have to pay taxes at all if you do it right. But also the traditional IRA can be very advantageous as well, because if you're thinking about saving taxes now when essentially potentially your tax bracket could be higher than when you retire, you're deferring those taxes now where you're paying maybe 20-25% if you're a high income earner or higher income earner, and maybe when you retire, if you planned it right, your income could be very, very low and you wouldn't have to pay much taxes anymore. So a traditional IRA could be advantageous too. So it really depends on your situation. If you want to think about just very cut and dry, if you're thinking that, hey, you're in a higher tax bracket, and if putting money into your traditional side to lower your income will get you into a lower tax bracket where you're paying less taxes, then that's advantageous for you to do. If you don't feel that you need those lowering your taxes down so that you can get more, pay less taxes, then doing a Roth IRA would be good, right? But it really depends on the situation. If you have children, right? If you have children, young children, you're working, you're lower income, you could get what they call an earned income credit, and using a traditional IRA to kind of manipulate your income and lowering it down more could actually earn you not only money for your paying less taxes, but you can get more credits for your children as well. Okay. Right? Also, the government also incentivizes us to save money in either a Roth IRA or a 401k. They give you some credits too. Okay. Right? They give you some credits if you're lower income and you are saving in these retirement plans. When you do your taxes, you'll notice that you get a little bit extra, maybe a couple $100 refund for saving in your retirement plan. So make sure you do that. If you have a CPA, talk to your CPA about that. Yeah, I heard Jonathan talk about this. Very advantageous to save into a savings account. Okay, thank you, John. That was very good information. To me, at the end of the day, having a savings account is still better than having none at all. Yes. Because, like I told you guys since the beginning of the video when I went through the numbers, you see only 30% of Americans have a savings account, and 69% of adult Americans have less than $1,000 in a savings account. Can you imagine what happens tomorrow, like an emergency, and you only have $1,000? That's not enough. Well, think about what happened last year. We had COVID happen, right? And COVID hit so hard, and people have an average of $1,000 savings, and your rent is more than that, right? That couldn't even last you for like 1 month. Yeah, you can't even last a month. That's why the government has to come out with stimulus checks and ways to help us, because the Americans are not saving enough money, right? But after COVID now, a lot of young people and a lot of people now realize that, hey, we really got to save money. Correct. Right? And save it early. The earlier you start saving, the better it is for you, because you got compound interest on your side. It's going to grow over time a lot, right? And so don't miss out. Correct. Okay. So I have another third question from Jonathan. So what are the differences? What are the differences when it comes to paying taxes for the two, W-2 versus 1099? So W-2, like I said earlier, a lot of your taxes are already taken out on your each paycheck. So then everything is already kind of prepaid, right? Now, not prepaid in full, because it really depends on how much you're deducting. I got some friends out there, you know who you are. You claim exempt, or you raise up your number to like 4 or 5 so that you can get more on your commission statements. Yeah, that will hurt you at the end of the year, right? But some people may say, hey, you know what? I don't want the government to hold on to my money all year and don't pay me no interest at the end of the year. I'd rather have my money now so I can take care of what I need to take care of, and at the end of the year, I'll just pay my taxes. Or some people, they're very good at calculating, okay, how much total income they make, and they work with their CPA, and their CPA will give them a number saying, okay, this year, this is how much money you need to save, you're going to have to pay in taxes next year. And what they'll do is they will tune their W-2 so that they take out just enough taxes so at the end of the year they pay zero.
Oh,
Right? Or maybe they get a
Pretty
refund
clever.
because they got some credits, like for having kids or whatever. But on the federal tax side, they want to make sure that they just pay just enough taxes so at the end of the year they get zero, right?
That's
And if they
pretty
get some
clever.
extra credits back, they do. And I have some people that are like that, right?
Okay.
So I help them with that, help them calculate that number. Some people are like, hey, you know what? I'm a bad saver. You just keep all the extra money, take more than you need, and then at the end of the year, I get a big refund, right?
Okay.
And some people are like, I don't want to give the government a dime. I'll pay it when I need to at the end of the year, right? So everybody's a little different. When it comes to W-2, most of your things that you need to keep an eye out for are credits,
Okay.
right? Credits for like children, credits for savings in your retirement. There are always these different type of credits that you can earn if you have like Go Greenhouse. You know, they're gonna give you some credits for that. So there's different type of credits you can get. So those are the things that you need to keep up with, or talk to your CPA, you know, or keep up with someone who's following up with those things. You know, we may come out with some videos when the new tax season comes of what credits that you can get. So, you know, make sure you follow us so that you can keep up with those things. But with W-2, generally a Schedule A is your personal deductions. The government already gives you a standard deduction,
Correct.
right? So a single person this year, they get $12,400. A head of household gets about $18,000 odd, and a married couple gets double of the
So
single,
24,800.
right? So about 24,800. If your personal deductions are less than your standard deduction, you take whatever is higher. So even some people may say, well, I pay taxes on my house, I pay insurance on my house, I pay interest on my house, I pay all these personal expenses, I have medical bills, but if all your items on your Schedule A, your personal deductions are less than your standard deduction, you take the higher. You don't combine the two like it used to be,
Okay.
right? So with W-2, you kind of got a little bit disadvantaged when you have that, but you have a lot of other benefits, so it's kind of give or take, right? When you are 1099, you don't get no help at all, right? You take care of yourself. So the money that you receive, you're responsible for deducting all the expenses, right? After you deduct all the expenses, you may have a negative,
Mm-hmm.
or you may have a net. A net means that you made money, right?
Okay.
And if you made money, you will pay taxes on the net income that you make. Not the gross income that you make, but the net income that you make. The first tax that you have to pay is what they call self-employment tax. It's just another word for your Medicare Social Security tax. But because you are self-employed, because you are the employer and you are the employee, then you have to pay both sides,
Yes.
right? You pay both sides, but on your federal tax side, they will deduct out half of that, what you paid on, so that you pay less on the federal, but you're still responsible for the full amount on your self-employment tax.
See.
So if you had a net income of like $10,000, well, you're paying $1,500
Oh,
right
wow.
away, right? And then you will pay federal taxes on your net income. Now, of course, you're going to deduct out your standard deduction, and whatever's the adjusted income, then that's what you pay your taxes on.
I see. Okay.
So when you're self-employed, the key thing is just to make sure that you have your expenses organized. If you, like in our Vietnamese community, nail salon, right? All you nail ladies, all you beauty ladies, you receive a 1099. You know, your common expenses is your cell phone, right? Your common expenses is your nail supplies, right? Your common expenses is your
Commuting to work, the gasoline.
your commute, right? Your commute. And now your mileage from your house to your salon, you can't write that off. But anything else, if you have to go errands you have to run, or you have to go travel around anywhere, those are deductible expenses too, right? Your car payment up to a certain extent. So whatever you use for personal, you can't write it off. But whatever you use for business, you can write it off. You can do your uniforms. You can do gifts for your clients. You
Take them
can-
out for dinners, lunches.
I don't know about
Did
dinner or
you-
lunch, but maybe like lunch, or you buy them gifts, like thank you gifts for coming and being a client at the salon.
Okay.
I don't know about taking out for dinner. That's more like for us, but it could be, right?
Okay.
So anything expense. Now, if you're not quite sure about your expenses, give us a call or let us know and just say that, hey, here's my situation. I just don't know if I'm taking advantage of all the expenses I need to take, right? Can you help me?
Correct.
Right? And then we can help.
Okay. So just to go back to the viewers, I know the topic is a little bit confusing with a lot of numbers. So if you have any questions or any concerns, just drop a comment or call us afterwards, and then we'll be happy to assist you. But I'm gonna move on to the next questions. I think I have one more question, on John.
Mhm.
I think you kind of a little bit went over this already, but how can a person receiving 1099 pay less taxes? But I think you just mentioned that there are deductions that they can take, like for a nail technician, the cost of supplies, the commute, cell phones, stuff like that. But are there any other ways that a person with 1099 can deduct the taxes?
Yes. So earlier we went into a lot of savings for W-2, but we didn't talk about the 1099 savings, right? So besides your general expenses that you can deduct, a business owner also has access to savings.
Okay.
Right now, they can choose three types of savings for retirement. The first type is your traditional IRA and Roth IRA.
Okay.
Whatever you put in there, for traditional side, you deduct 6,000 or 7,000 over 50, and that comes off your income as well. So you pay less taxes, and also that comes off your income where you're going to pay less on the federal side. Now, you're still going to pay the self-employment tax because the self-employment tax is based on your business income. The IRA portion affects your federal taxes. Okay, so don't think that, hey, I got that $10,000 bill, $10,000 income, I pay $1,500. Now I'm going to put money into my traditional IRA. I'm going to lower that bill down. No, it lowers your federal bill down. Okay. Now, if you make more money and you want to put away more money, another thing you can do is you can use a SEP IRA. And a SEP IRA is just a self-employed plan. If you're self-employed, you can put away up to 25% of your income as a self-employed person, or up to $52,000 maximum, whichever is lower. Okay. You potentially could put more away than $6,000. So if you're looking for more ways to put money away, that is another way that you can put money away. The disadvantage of a SEP IRA is that if you have employees, then whatever you put away for yourself, you need to put away for your employee as well. So if you're putting away 20% of your gross income, or your income, for yourself, then you need to put 20% away of your employee's income too.
Okay.
So you got to give them what you're giving yourself.
Okay.
Okay.
I see.
Now, another thing you could do is say, some people may say, you know what, John, just me, nobody else. But I want to put more money away. What you can do too is that you can do what they call a solo 401k. And the solo 401k is very much like your company 401k. It's structured very similarly, but it's just for one person.
Okay.
Right? So you want that $19,000 500 limit so that you can put more money away into your traditional, or maybe you want the higher limits on your Roth IRA, because the SEP IRA, they don't let you put as much on the Roth side, right? You can take advantage of using the 401k for yourself too. That's for like a single. Now, if you own a company, then you have access to other same W-2 employers, except now you are the employer and you're giving benefits for your employees. Then you get special deductions for being an employer, giving your employee benefits, right? So if you guys have questions, like you own your own company and you're looking for ways to get more deductions and have like an exit strategy for yourself where it benefits you more, contact us and we can talk about your situation. It's a little complicated to talk more about that on this
Yes.
live stream. Like I said, I really want to talk general for this one, but for business owners, if you're looking for more ways to save money, IRA, SEP IRA, solo 401k, those are legal expenses that you can deduct, right? It's taking money from one pocket and you're moving it over here. You still have the money and you get to deduct, right? Business owners think that, oh, I got to go buy a new car, I got to buy new equipment, I got to buy new this, buy that. But what happens? Money is going out, you get this asset that is losing value every day, whether you use it or not, and it's not your money, it's not money anymore. And to convert it to money, it's tough. Unless you're using that equipment to make money, then okay, that's different, right? But if you're just buying it for the purpose of deductions, it's not making you money, so basically you are losing money. You're just paying less taxes, but you're losing money, right? A 401k, solo 401k, Roth IRA, those savings account is your money's still there. It's just put into a different account, and you're getting deductions, right? Okay. One more thing I forgot to tell you guys. Both on W-2 side and 1099 side, when you do your healthcare, or if you do your healthcare with Frank, ask Frank about HSA, okay, Health Savings Account Plan. Now, if you're healthy, you don't have medical issues, and you want to save money on your healthcare, buy a health savings account healthcare plan. What it does is normally it's going to be high deductible, so if something happens, you got to pay more out of pocket. But during that year, you're allowed to open an HSA, a health savings account, which will allow you to put money away into that account and deduct your income as well.
I see.
Right? So right now, like, Julie says that she has a medical condition, and her chiropractor, Dr. Medina, said that she may need to get some specialized equipment to help with her condition, to help her with her muscles and to help her blood flow get better, because she may not have time to go see her chiropractor all the time. And so he said that, hey, why don't you use a HSA and you can buy these equipment, so when you put money into the HSA, you get to deduct that income out, right? Oh. And lower your taxes down. And if you use that for qualified medical purposes, you never have to pay the taxes on it. And say, for example, you didn't have to use it, right? Any interest that you earn in your HSA later on in life when you take that money out for medical purpose, no taxes on the interest. So it's one of the best, I think, one of the best savings accounts out there. And both W-2 and 1099 people can use it. You're going to have to go to the doctor. You're going to have to buy glasses if you have prescription. You got to go to the dentist if you want to keep up your teeth. Why not start saving now into this account, save money, and then that way you don't have to pay taxes later on, right? So these are some very interesting ways that you can not only save money, but at the same time get tax deduction, tax benefits.
I see. And what's the cap on that health savings account per year?
Yes, good cap. Good question, Frank. The cap for single person is $3,500. The cap for family is $7,000. So I'm gonna drop $7,000 into my thing. I'm gonna get a new massage chair, and I'm gonna deduct it.
I might actually have to get married now then. So,
you have a baby. It still counts as family, Frank.
I'll think about it.
Oh, you think? See, Phoebe, last time he was saying confidently about...
If the child tax credit keeps going for another 5 years, I'll actually have a baby next year.
No. You better put a ring on it first, Frank. It ain't that easy.
I know, right? So based on what John has been telling us the last hour, there are multiple ways to save money besides the traditional IRA, Roth IRA, 401k, which there is a cap that he said, I think about $6,000. But then, if you want to save even more, you can put in a health savings account, because I think they can do both at the same time, right, John?
Correct. Yes.
Yes. So you put a $6,000 over here, and then you put another $3,500 over here. So you save a little bit more money, less taxes. So there are a couple of different ways you can do it. So if you still if you're still not clear about which ways you should take, just give us a call, and then we help you out. But I know it's been a pretty much general topic to talk about, and there are a lot of numbers and a lot of ways to go about this. So again, if you have any questions or concerns, drop a comment, and I'll have Jonathan to answer you guys. But if you're shy to talk right now, you can just text us or Facebook message us, and then we do our best to help you guys out.
Yeah, thank you guys for joining the show today. We talked to her just a little bit, and it's already an hour. It passed by very quickly. But I got to go pick up the wife soon because got to go pick up the kid, take her to the doctor. One last thing, guys. Another tool that you guys should have in your belt for savings, once you do the other ones too, is you should save in life insurance too.
Oh, yeah. How could I forget?
Yeah, life insurance is a very good tool to save for if you do it right. Okay, don't think that, hey, a lot of time people hear insurance like, I want the cheapest, right? Don't think as your life insurance as the cheapest. Think of it as, I do want cheap insurance, but I want a tool that I can save in it as well. So I want a low cost life insurance, but at the same time, I want a tool that, because it's low cost here, I can contribute extra money to it so that I can save more money, and then I can get pretty much the life insurance. If you do it right, it acts very much like a Roth IRA, where if you put it in there and you do it the right way, you may not have to pay any taxes in the future when you take the money out, right? And so that's a very powerful tool. And not only are you saving money for that, but a lot of time with these new life insurance policies, they have like living benefits, where if you become terminally ill, you become chronically ill, critically ill, you can use the benefits before you die, or you have long-term care in there as well. So you're leveraging, right? You could be leveraging $1 to up to $5 if you plan early enough. And if you plan a little late, maybe you still get $3 out. So imagine putting in $1 now, and then you get $3 of benefit out later. Whether it's $3 to $5 benefit if you pass away, or $3 to $5 benefit if you become sick or disabled. And if you don't need those two, you have a nice little savings account that you can utilize. Imagine if you have Social Security, not taxable, Roth IRA, not taxable, life insurance, not taxable if you do it right. You have 3 streams of income.
Oh my God.
Just think about Social Security, $1,500, and if you can do something where you get $1,500 a month from your Roth IRA, and you have $1,500 a month from your life insurance, and you got almost $5,000 a month, that's $60,000 a year, tax-free.
See you in Hollywood.
Right? Hollywood.
That's where I live.
You got to use the 3, right? You got to take advantage of Social Security, your IRAs, and your life insurance. And if you do so, start now, start early. You're going to be so happy, and a lot of people who work with us are working towards that. And I guarantee when they get to retirement, they're going to be really happy, right? I'm working towards that for myself right now too. And so, it's not much, but hey, to me, if I have $60,000 and my wife has $60,000 a year, the both of us have $120,000 tax-free, I think I can live a nice retirement, right? I mean, is that nice? Maybe that's 20 years from now, inflation and whatnot, but still tax-free.
$120,000 a year, that's something.
Right? So take care of your children. Do what you can for them. If you have children, if you don't, just try to save as much money as you can right now. Because if you can, you're going to have a nice retirement. You have a real retirement, not, this I'm living under the, trying to hide from taxes. I'm trying to get Medicaid, trying to get SSI retirement.
Yeah.
And you got to live like the bare minimum. You don't want to live the bare minimum life.
You don't want to be 65 and working and still working. That's just not good.
Right. Now, if you want to work for fun, that's fine. Right? I don't mind to work if I'm past 65, because I think finance is a sexy career that you could work at any age, at any time, and so I like it. Some people may think it's kind of boring, but I think it's kind of exciting, and especially if you can develop these kind of strategies for people, it's very, very powerful, right?
Okay.
So thank you so much for tuning in now. I can't talk anymore because she's going to be calling me here in the next 5 minutes, asking me where I am. So goodbye, everybody. This is Jonathan Tran. And this is Frank with the Paramic Hour. Thanks for joining us, and we'll be back on Tuesday for the Mid and Me Show. Thanks.
See you guys. Have a good week.
Bye.